everyone, and welcome to Cherry Bekaert's webinar titled Happily Ever ACfR, Crafting Your Financial Reporting Fairy Tale. As we noted, this course will be eligible for 1 CPE credit, and we will be answering your questions throughout the webinar, so please share them in the Q&A box. We know how busy you are this time of year, especially, a lot of our client bases with the June and September year end, so greatly appreciate you taking an hour out of your day to spend it with us. Meet the speakers. Hello, nice to meet you. My name is Danny Martinez. I'm an advisory managing director. I lead our government and public sector accounting and advisory group. And within our group, we do 4 primary things. The first is implementation of new accounting standards. The second is ACfR writing, which is what we're going to be covering here today. The third is something called a surge team accounting that is helping governments get caught up on their accounting and financial reporting. And lastly, we provide a GASB as a service offering, which is kind of a year-long on-demand co-sourcing and outsourcing thing we do for high-performance governments. Thank you for joining today. And Scott, go ahead and introduce yourself.
Hello, everyone. My name is Scott Anderson. Good to be back on the webinar circuit. I've been with the firm for about 18 years, all with Cherry Bekaert, starting in Raleigh, and then went to Tampa. Spent a 2-year term as a practice fellow at the GASB before returning back to Raleigh. And I mostly play the role of auditor, but also participate in the advisory practice with Danny on occasion.
Perfect. Thank you, Scott. The one thing I didn't mention is I lead our national practice, but I'm out of Dallas, Texas. It's a great night last night with that Rangers win, headed to the World Series for the first time since 2011. Hopefully when this webinar gets on YouTube later, I won't be regretting that I mentioned the Rangers World Series attendance. Before I get started, I just want to say, Scott and I have been, providing these webinars and these podcasts, and we're really trying to up our game in 2024 with consistent webinars, consistent podcasts. So we really want to hear from you all about what you want to hear more about. We had a great reception. We would continue to get great reception from our GASB 96 webinar. I believe about 4,000 views already on that. And so just let us know what other topics you'd like us to be presenting on here in Q4 2023 and into 2024. But let's get to the agenda at hand. And so we are here to talk about your ACfR, right? And so the 5 topics that we're going to be covering over this next hour is we'll level set a little bit with the ACfR introduction. Then we'll go into kind of the meat of the presentation. Scott is going to be going over what GASB says about note disclosures. A little bit brave for him to do that with some GASB staff on the call, so he'll be going over that. Hopefully, good information there. Really excited for that part. Then we'll be touch on common errors identified in ACfRs. Scott can share what he sees on the assurance side, and I can share what we're seeing as we're drafting the ACfRs on the advisory side. Give you some tools and templates, right? It's not a webinar that we do without giving you some tools or templates to be thinking about as you're working through refreshing. And lastly, I'll conclude with our 4-phase ACfR preparation process, just how we think about from starting an advisory engagement, drafting an ACfR to where we get to that issued deliverable and everything in between. So whether we are assisting you all or you're completing it yourself, hopefully you'll find that 4-phase approach very helpful for you. So let's go ahead and get on the same page first with this ACfR introduction. And again, this is going to be very brief in nature because I really want to get to that heart of the presentation. And I'm assuming that many of you all who are attending a presentation called Happily Ever ACfR, you kind of have that level or that base level knowledge of what we're talking about. But I did have some attendees reach out to me and say, hey, this is finally starting to get transitioned to me, or, I'm new in my role, right? There's a lot of transitions in government right now, and the ACfR is part of my process. What is this ACfR? What are they talking about? So the ACfR is a set of government financial statements that complies with the accounting rules prescribed by GASB, but also includes additional information about the financial condition of the government. You can Google search and find the ACfRs publicly available, of any state and local government. And you're typically seeing that these documents are, 120-ish on the low end to 300 pages on the high end. So really voluminous and a lot of information in there in these ACfRs. And for those of you all that have been doing this a while, you'll note that this used to be called a CAFR, and it's changed to now ACfR or ACfR. So within this, we have 3 sections. The first section is the introductory section. This is where you're getting the general information about the government, organization structure, leadership, economic condition. Things that you're going to find in the introductory section are your letter of transmittal. So that'll have a profile of your government. Sometimes there'll be additional budgetary information in there. There'll be some acknowledgments, some references to awards that were won, and a little bit more lenient in the type of information that can be included in that letter of transmittal. In addition, you'll find the GFOA certificate. We're going to touch on that certificate for achievement and excellence in financial reporting a little bit later, but you'll find that in there as well if your government was awarded that. The organizational chart, and you'll also find principal officials. Within the financial section, that is your basic financial statements. And so whenever Scott goes into the common errors, he's going to be spending a lot of time on the different areas related to your financial statements. So within there, you have your basic financial statements, including the notes. You're going to have your RSI, or your required supplementary information, which includes management's discussion and analysis and other supplementary information. Sometimes you'll have those combining schedules or those budgetary schedules. Those will be included in there. Your last section is your statistical section. And within there, you have some financial trends. You'll have information about revenue capacity, debt capacity. You have some demographic info, as well as operating and other information. Typically, the first 1 to 5 statistical tables are referencing 10-year trends within your government that you're pulling from that financial section, but there's a lot of other information related to debt, demographic, like I touched on there, that is included. All right, so now that we've gotten that baseline in, I'd like to ask our first polling question. What is your fiscal year end? And this will help us as we go through the discussion in the next hour to kind of get a feel, keep being here October 24th, of where you are in your preparation of this year's ACfR. So we have June 30, September 30, December 31, other, and E, unsure, or I'm a spy. We see the registration lists. We have some friends that are attending from maybe other firms or other professional organizations. We love to have you all attending our webinars, greatly appreciate it. And if you want to be a spy, you can click on letter E. And we'll give you all a few seconds here. And I'm a spy sometimes too, so spies are good.
Well, and I happen to know that our friends over at the Gatsby need CPE credit as well. They don't get CPE credit for writing financial standards. They have to listen to somebody else talk about the standards that they wrote in order to get the CPE credit.
Perfect. All right, great. So it looks like 65% of you are junior end. So you're either just finished right in the thick of it, or maybe playing catch up, with 18% September 30, 8% December 31, and we have 5% that are spies. Great. Thank you all so much for responding to that polling question. Keep in mind, you need to be doing that for your CPE credit. All right, with that, let's turn it over to no pressure, but what I think is the most interesting part of our presentation, which is part 2 about GASB and note disclosures.
Well, I want to first comment about those, the results of that poll.
Sure.
We've had this webinar scheduled internally for several months now. But when Danny reminded me of it a couple of weeks ago, I thought, man, this is a terrible time to put on a webinar. Here in North Carolina, for example, we have an October 31st deadline that we're all working towards. And I thought, we're not going to have anybody join a webinar this time of year, let alone have to prepare for one. And we've got more than 400 people on right now. It was either the catchy title that Danny came up with, everyone wants to know how to craft a fairy tale financial report, or it is that everyone here values this process, values financial reporting. And I want to reiterate that I think that this is probably the most important job that a government finance department has, which is putting together their financial report. A government is accountable for the raising and spending of public funds. And one of the key mechanisms for demonstrating that accountability is through the financial report. And it's important to do it well. And I think you might be surprised by how many people actually look at your financial reports, especially when you post them online. Maybe you do track the visitors, but I think a lot of people review them that you may not realize. I can remember a couple of years ago, as I was getting ready to head up to Norwalk to be with the GASB for a couple of years, I was interviewing with David Bean. Many of you know him, the former director of research and technical activities. And one of the questions he asked me was, out of all the reports you've reviewed, tell me one that you thought did a really good job. And that's a very intimidating question to be asked on the spot, but I had one that popped into my mind. And so I answered it. It was a municipality in Ohio. And I answered that question, and Dave smiled knowingly and said, yes, that is a good one. And I thought, wow, he must read all of them. He probably does. He jokes at the conferences when he speaks that his favorite thing to do on an airplane is to read financial reports, and he probably does. But I guess the point that I'm trying to make is I think a lot of people review your financial statements, researchers, investors, creditors, and you just don't know. And so I always, when I'm preparing financial statements, I always try to remind myself that David Bean is going to read this. And so I want to get it as well done as possible. Now, this section, we calling it, what does GASB say about note disclosures? It's probably more appropriate to say, how does the GASB think about note disclosures? What's their approach to note disclosures? Because in general, the GASB does not like to limit what disclosures you put, but they do have some rules that they put in place for when they require note disclosures. And I think understanding that perspective helps to determine when it's appropriate for us to put disclosures in those cases when there's not explicit guidance telling you to disclose something. And so the GASB put out GASB Concept Statement 7 last year in 2022. And I think it's a great look at how the GASB looks at note disclosures and their process and how we should think about these things. A concept statement, of course, is not something that users or preparers have to apply. Flies under the radar sometimes, although it does go through the same due process and same feedback process, but it doesn't get the same level of scrutiny, I think, because preparers don't actually have to implement anything with these concept statements, but it gives us a sneak peek on how they approach it. And so for Concept Statement 7, it identifies the purposes of notes, which is first to provide information that explains, describes, and supplements financial statements. And I often see disclosures that really don't have anything to do with the financial statements. I'm sure it's a great disclosure. It is auditable. And it's something that auditors do have to take a look at, but it doesn't really supplement or explain what's in the statements. And I think that is an important purpose of notes. And that's might tell you that if it doesn't do that, it should probably be excluded. The other part is it provides information that is essential to users in making economic, social, or political decisions in assessing accountability. Now, by the way, political does not mean that the content of financial reports is political, but it's important information so that those who are in a position to make decisions under their political purview can make an informed decision. So Concept Statement 7 really hits home on what essentiality means. So what does it mean? What does it say about what is essential? If you looked at a spectrum or a continuum, and essential is on one end of the spectrum and useless is on the other end of the spectrum, essential is intended to be a somewhat high bar. It means that the information is meaningful to a user's analysis in making decisions and assessing accountability. And it also means that there's a depth and breadth of users that will utilize the information. Recently, I reviewed a financial report that was well over 300 pages long and had in my opinion, more disclosures than really needed. And so I had expressed that feedback. Why are we disclosing this? Why are we disclosing that? Why is this in here? And the response was, well, a city council person or a commissioner would ask a question that couldn't directly be addressed in the financial statements or the report. And so we added the schedule to address that question. And then the next year, somebody else asks a question and that previous schedule gets rolled forward. And pretty soon you've got a lot of stuff in there that was intended for one specific user. And what essential means is it's going to be useful information for a variety of users. And so I think that's an important consideration when determining what should be included in your notes. So when we're thinking about our financial statements, who are the users? When we're thinking about our notes, how should we craft it? Do we need to assume that users are well informed or that they don't know anything about the government or the financial report? And so I think the first step is, well, who are our users? And we've got three user groups. GASB Concept Statement 7 did not invent these. These have been around. These have been identified long before GASB was even founded. But we've got citizenry, those to whom the primary government is primarily accountable to, investors and creditors, those who lend and participate in the lending process, and then the legislative and oversight bodies, those who directly represent the citizens. And every government's got this legislative and oversight user group that they must think about. Not every government has the investor and creditor. That group I find to be the most analytical, the most detail oriented, the group that will dive way into the details. In fact, the GASB board is usually always represented by at least one person who represents a user group. And the current board member worked for a rating agency for his career, and so represents kind of that investor creditor user group. And then we've got citizenry, which is probably the harder user group to define and to cater to. They're not very responsive. And they're not very representative when you do get responses, but they are a group that you have to consider in your financial report.
Hey, Scott, those are the people that show up at every city council meeting and at the open session and just like say things. So I would say for some state and local governments, they do have what I guess you would call it active citizenry, even though it's maybe a minority of the population. But I back in the audit days, and I have some people on the presentation today, I can remember having to address really detailed questions from the citizenry who've gone through the audits before we were presenting them.
That group, it reminds me as an auditor where you sometimes have to send confirmations to utility customers or property taxpayers. We don't do that very often, but some of the responses can be a little interesting. And so, and I know that when the GASB tries to survey or get feedback from user groups, that is a hard group to get information from. So what are the user's responsibilities? Again, do we assume that the financial statement reader is ill-informed, doesn't know anything? We've got to explain it all to them, or do we assume that they know as much as we do? And I think that the answer is somewhere in the middle. The users are responsible to obtain a reasonable understanding of government and public finance activities and the fundamentals of government financial reporting. They are responsible for studying the information with reasonable diligence. That's why you don't have to repeat things often. You shouldn't be repetitive because you should assume your users are going to study it out and see the information. And you should assume that they're going to apply relevant analytical skills. And I think that this takes some of the pressure off of crafting good notes. You can assume that your user or reader can speak the same language. They should be fairly informed and understand what you're talking about. We shouldn't have to explain GAAP in notes. And sometimes we do that, and sometimes maybe it is beneficial, but for the most part, that's not what the purpose of the notes are. We shouldn't be explaining GAAP or explaining things and certainly not including things that are generic to the government. So concept statement 7 also provides a few do's or don'ts, some criteria for disclosure. And again, this is criteria that they follow when they're crafting accounting pronouncements. And the GASB test drove these concepts with the new certain risks and uncertainties project that's going to be out soon, which is all about disclosing certain risks. And so some of this, well, I'll say a lot of this was referenced when that guidance was being developed. So types of information to disclose includes the description of accounting and finance related policies. For most of us, that's note 1 and 2. Not every accounting related policy needs to be disclosed. So I think that you can use some discretion as to what's relevant, what's material, what's important enough to include in that policy document. More detail about the explanations of amounts recognized in the financial statements. Sometimes I will see that the fund balance portion of the balance sheet, for example, is very detailed. It has everything listed out, and then I will see a note disclosure presenting the same thing, which probably isn't necessary. I would say in that case, maybe a summarized version in the balance sheet, and then the more detailed in the disclosures. That's kind of what we're talking about. And then information related to the financial position of inflows and outflows that would not meet the criteria for recognition. Think about our contingencies and that sort of thing. And then other finance related information associated with accountability. So those are some of the do's. Next slide, some of the don'ts. Information that's subjective or predictions about the future. I think most preparers have no problem with these first two. They're quite uncomfortable with making these types of assessments about future events, and are usually quite forthcoming with that feedback when the GASB asks for it. The second one, general or educational information that is not specific to the government. I think sometimes I see a lot of that. I'll give you an example of what I see all the time. When the GASB put out GASB 62, they specifically did not include FASB's guidance on risks and uncertainties, FASB topic 275. And that required some disclosures, nature of operations, estimates in the financial statements, concentrations, and that sort of thing. The board decided not to include that in 62. So that's not, those disclosures aren't required. Yet every single report I seem to see has that very generic blurb about financial statements contain estimates. And it's, if you pull it in from a template and you don't have to change anything and you roll it forward every year and you can copy and paste it into any other government financial report, that's not really information that's appropriate for note disclosures. It's not essential. Other things to think about, and I think this first bullet takes some more pressure off. Financial reports should not be considered the sole source of information that users utilize, and I think that helps. You aren't responsible to completely inform the stakeholders of your government. There's other information available, and and we don't have to dive into that part of it. The other thing I wanted to point out, and this is not a concept statement 7 thing, but the qualitative characteristics of financial reporting, relevance, reliability, consistency, comparability, timeliness, and understandability are important. And I think understandability is something that we should think about. Having disclosures that are so long and complicated does impact the understandability of the statements. And it goes the other direction as well. Not providing enough explanation also affects understandability. And so that's really something, subjective as it is, that should be that we should strive for in note disclosures to make sure that all users can understand the financial statements. And sometimes it's just the format of the information being presented differently would greatly improve understandability. And with that, we will go on to the next polling question. And this is, I didn't write this. This is Danny's polling question. With the new perspective, how many pages do you think you could cut out of your notes of the financial statements if you did a true refresh? 0, my notes are pristine. 1 to 5, I'm sure there's some room for around the edges. 6 through 15, why I have been including all this nonsense for all these years. And then Scott, can you talk to the GASB about notes for GASB 68 and 75, please? Or unsure or still being a spy. As you answer that, again, we're not just talking about cutting pages out. Sometimes that is an answer, but the other answer might be adding pages in to make it more understandable.
You cut out all the stuff that you don't need, and then you add in the stuff that you do need to be more understandable, and then you're going to end up with a net negative. That's what I'm just trying to get under 250 pages on these things.
And then I'm glad you put item D there. Scott, can you talk to the GASB about the notes for 68 and 75? Oh, and here's our results. It looks like 1 to 5. I'm sure there's some room around the edges. The GASB 6875 did greatly increase notes. It's currently one of the GASB's post-implementation reviews, and I'm sure I'm not the only one, but there are surveys that they put out there, ask you for feedback. How did implementing these standards work, or how'd they go for you? How do you like them? Any feedback, blah, blah, blah. And I remember I got that survey, and it was right after I had just reviewed a very large Virginia county that had 6 or 7 plans and literally 80 pages of note disclosures. And so that was my response. I said, it's great, but the notes seem to be pretty long. I will say, though, there's nothing you can do about it when there's that many plans, but there are ways to present that information more efficiently. For example, this particular government has the state plan, and then also has the school board, which is a component unit, which is also part of the state plan. And so they would disclose their plan completely, and then they would disclose the school's plan completely, and it's the same plan. And so there's definitely opportunities to put them together and only disclose the relevant parts of the school.
Gotcha, thanks. Just to chime in before we go to the next point, that one of the things that I think is the most interesting whenever we get these, ACfR writing projects is to kind of take a look at the notes and just like, let's take a step back, get a third person's perspective on them on how do they look, where, not to cut for cut's sake, but where could we find areas where we're presenting things because someone put it in there, 2-3 finance directors ago, and it's just kind of carrying forward year after year. Of course, that's not right now for your June 30s, right? You're in the heat of things right now, but if you're looking out into first quarter of 24 and and looking at it and be like, okay, let's get this cleaned up for fiscal year 24. What can we do? And I think this is one of the more interesting areas to dig in, because it seems like it's just layered on layered on layered, and that's kind of our approach because we're afraid to take things out. And so just thought I'd share that.
Yeah, and some of you who are listening are audit clients, and I likely review your statements, and I usually leave a lot of comments in there. And if it's not meeting GAAP, then I'll add a specific reference. But a lot of times I'm adding comments to improve, and that's it's up to you whether or not you follow those comments. But that's our goal, is to make the reports better and to make them easier to follow. So I appreciate those who indulge me in my desire or efforts to do that. So with this next part, we want to talk about common errors identified in ACfRs, what are reviewers seeing year after year. And the GFOA puts out a list every year. They've got their ACfR review program. Danny and I have both on occasion have been reviewers in that program, and they put out this list every single year. And for the purposes of this presentation, we started with that, but if we were to cover everything that they have on their list, it'd probably take the entire presentation. And so we've limited it to just things that I personally have seen, that Danny has seen, and we'll talk through some of those. So and no financial statement section is immune. There are errors that are common in each of these sections, and we'll kind of take them one at a time. So we'll start with management's discussion and analysis, aside from the most common error, which is, it presents financial statement amounts, and sometimes the MD&A is drafted maybe earlier in the process, and then some adjustments get made in the financial statements, and then the MD&A doesn't get updated all the way through. And so that's the common error, that the amounts don't tie out to the financial statements. But the other thing that I see is you should provide reasons for changes. It should be an analysis. And I think there's no greater indication of how much a management values the financial report than the quality of the MD&A. It is a section of the report that some users will only look at. They only look at the MD&A. The MD&A is assuming maybe a less informed audience. It's going to explain more things. It's going to show an analysis so that the user doesn't have to go and do their own analysis. And so it is a little bit easier, and it is management's opportunity to describe to the user what happened during the year. And I can tell when it's copied and pasted from a template, and all you see is that the changes in dollars and percentages are put down without a very good reason for the change. The GASB is going to double down on that with the financial reporting framework improvements project, and really emphasize that this analysis needs to be in there. Also, go ahead.
No, I was going to say, yeah, that's what I was going to point that out too. Now with the new financial reporting model, it seems like, we know that sometimes this is the last minute 11th hour thing. And so GASB is trying to kind of re-emphasize and remind people, like, these are the types of things that are needed to be shown in there, kind of help to impress upon you all the value of that information. And then secondly, Scott shared an ACfR that he thought was like one of the best. One of my old audit clients, one of my favorite ones, the San Diego Regional County Airport. They have a great MD&A, great layout within their ACfR, and the MD&A is really nice. So that would be another one to take a look at.
The second is, well, let me go back to the second one, which is don't duplicate information that's found in the financial statements. And so I've seen this recently where you're supposed to describe or discuss significant activity and capital assets. And then what I end up seeing is a copy and paste from the disclosure, including the entire roll forward. And so that's not what the purposes of the MD&A is. It should just talk about significant activity summarized, and then appropriate to reference to those notes for more detail. So moving on to the government-wide and fund financial statements, the calculation of net investment in capital assets, this is something that I think the GFOA identifies every time. And as a reviewer, I don't always see that calculation. I can tell when it's wrong a lot of times, but sometimes, you can't see just by reviewing the financial statements the amount specifically of unspent bond proceeds, and the retainage payable might be buried. So that makes it difficult. But when you submit your ACfR to the GFOA, you include a calculation. And so a lot of this comes from that. And so just a reminder that including the deferred amounts and refundings and unamortized premiums and discounts and retainage payable, that all goes into the calculation, but you do not include things like interest or accrued interest or debt that does not relate to the construction or improvement of capital assets. Inventories and prepaids should be reported as non-spendable on the fund financial statements. And then only the general fund should report a positive unassigned fund balance. I think that's also a comment that we see a lot. This year, I did see a couple of instances where in the committed, assigned, and restricted, there were negative balances, which also is not appropriate. Probably a forgotten formula results in that negative balance, so watch out for that. And then the major fund calculation should be updated every year. And the concern here is not that there are major funds that don't meet the criteria. The concern is that you've got non-major funds that do meet the criteria and should be reported as major funds.
When we get to the tools and templates, we'll talk a little bit about the net investment in capital assets again.
Notes to the financial statements, I could probably do several slides with things that we see in the notes. This is one that I still see often. Deferred inflows, outflows represent a consumption or acquisition of net assets. not net position. And I swear that we make the change 1 year and then the next year it reverts back to net position. And so I just want to emphasize net assets is not a term that has gone away. It was not replaced by net position. Net position just became a more appropriate term when deferrals were introduced as financial statement elements. So net assets is still appropriate. Concept statement 4 defines deferred inflows of resources and deferred outflows of resources, and its net assets is the right term there. Additionally, notes should include or disclose significant encumbrances in total by each fund in conjunction with required disclosures about significant commitments. Whether it's in a specific commitments disclosure or somewhere else is probably not as important, but notes should disclose the aggregate amount of all pensions and OPEB plan liabilities, assets, deferrals, and expenses. We talked about, my Virginia client that has 7 pension plans, pension and OPEB plans. Well, there should be a schedule that's going to aggregate all of the pension information and all the OPEB information, make it easier to tie out to the front statements. Some common errors on the required supplementary information. Remember, there is a difference between covered payroll and covered employee payroll. Covered payroll is the payroll on which the contributions are based. And then also, unless the measurement date of the plan is the same as the fiscal year, you're not going to see the employer contributions be the same amount among those 2 RSI schedules. So one is measured as of the end of the fiscal year. One of them is based on the measurement date. Other supplementary information, which follows the RSI. And remember, there is a difference between statements and schedules. Statements are in the front, schedules are in the back, so the proper title should be used. I had mentioned before about the negative amount of restricted, committed, or assigned fund balances. This is more likely to be seen in the back schedules, which sometimes can be forgotten, but it's not possible to have a negative restriction. Also, the supplementary information should include the budgetary comparisons for all non-major governmental funds that have a legally adopted budget. Remember, the major funds will have those budgetary comparisons in the front statements or RSI, and then the non-majors should be in other supplementary information with a disclosure for the legal level of budgetary control. And then last is the statistical and other miscellaneous information. This is a very important section of the financial report as well, because I think a lot of users, they'll go to the MD&A and then they'll go to the statistical section probably before they go to anything else, because it does represent or does reflect a long-term trend of the financial position of the government. And so it's important to get it right. Some of these calculations, a lot of them revolve around the debt schedules. There's specific guidance on how to calculate those, and so it's important to be precise and to follow the rules with calculating those schedules.
All right, Scott, thank you for all of that information. Really appreciate it. So I'm going to go ahead and take over the next couple of sections. But yeah, Scott, please chime in as you see fit. So the first thing I'm going to touch on is tools and templates for ACfR preparation. What resources are available to make this easier? And Scott's going through the common errors and what we should have in the notes and all of the analysis and everything that is pulled in. These are difficult, and we mentioned that the sheer number of pages and the number of things that need a link from the front to the back and need a tie between the notes and the front of the statements. It definitely takes time to get this, 150, 250, 300 page document kind of pulled together each year. So some tools and templates that we'd like to point you to. First, the GFOA has their comprehensive general purpose checklist online. This is the same checklist that is used by the Special Review Committee. And so what that is it's a 48-page checklist. and it's used to help award that certificate of achievement for excellence in financial reporting. So some things that you can do with that is, say you want to do a completely full refresh analysis, maybe not now in the heat of things for your June 30s, but when I'm talking about, and you're turning the calendar to 2024, you can use it and you can look at the whole thing, or you can look at it by sections. Say, oh, I wanted to see if my letter of transmittal is hitting the things that it needs to have. I want to see if my MD&A has all the adequate information. You can maybe take it incrementally, if maybe that's a little bit easier for you. Another thing that you can do is, say I just want the new things. I want to make sure that I have everything disclosed related to my lease liabilities or my subscription liabilities. Let me see what's changed since the prior year checklist. Now that this new GASB has been implemented, and let's see what what new additional information I need to add that maybe I haven't added. An additional thing that I like to point to you is the Government Accounting, Auditing, and Financial Reporting Appendix D, also known as the Blue Book. If you all have not used this and you're a member of GFOA, I highly recommend after this webinar, you go, Google search GAFR Appendix D and bookmark it. What that is it provides you a full draft financial statement. You're going to have all the financial reporting. You're going to have all of the note disclosures. And if you're needing a template for, a specific type of transaction, you're going to find it within the Blue Books. I highly recommend, if you have not taken a look at that you do. In addition, there are usually some state developed templates, or maybe Department of Education for your state has developed a template for a specific chart of accounts. So this is meant mostly for those of you that are maybe a little bit new to this accounting and financial reporting, and the ACfR has kind of been put on as a new thing. You'll want to see what other templates maybe that the state has put out there that helps you to build that shell. And we'll talk about building the shell here in our last section, but to build that shell for your ACfR.
I would, Danny, if I could interject,
Yes,
I
sir.
would like to point out that those illustrative templates are practice aids rather than rules. They don't create rules, and so they are great and useful, but we don't have to assume our reports should match. We should start there and tailor them to what our government actually has.
Perfect. Yeah, great point. Not a cut and paste. Whenever you read the paragraph, you're like, well, it doesn't really sound like us, but it was in this Blue Book, so I'm going to use it. Right? It's a resource library to then tailor. Thanks for pointing that out. Speaking of resource libraries, one of the things that we're working on and continuing to grow within our advisory group, our Government Public Sector Accounting Advisory Group, is a disclosure library. And so what we're pulling together here are examples of notes, not dissimilar to what you would find in the Blue Book, but that may be a little bit more tailored to our client base, to the local governments that we're servicing. And some of the areas where we have additional resources and templates as of now would be the summary of significant accounting policies. There's some examples there again. So to Scott's point, they would of course need to be tailored to what your accounting policies are, but just to get an idea of the framework. Net investment in capital assets calculation. I know that's often a challenge of making sure that you're pulling in the right assets, pulling in the right debt, and that you're pulling together that calculation every year. A major fund determination to make sure that you aren't needing to move some of your funds from the back of the financial statements as a non-major fund up into a major fund. In addition, a GASB 34 conversion worksheet. What that does is it takes the information that is in your governmental funds financial statements and helps you get from there to your government-wide presentation, adding in that long-term activity, the pension, the OPEB, all of that type of information, as well as a GASB 54 fund balance classification definition worksheet. One of the challenges we see in ACfRs is labeling something as restricted, committed, assigned, and they don't really know why. And it's just we're just copy and pasting equals this cell from the income statement. That's why we're putting it in this bucket. But it helps you to think about these are the definitions, and this is why you want to be picking the different bucket that you are putting it in. Would also love to hear both from our audit clients and our advisory clients of additional disclosures, tools, and templates that you think we could build these shells on as we continue to provide this disclosure library as one of our services for our GASB as a service clients. All right, let's go ahead and head to the last phase, which is our 4-phase preparation process. And again, this is talking about how we can get you from just surviving, right? Survive in advance, kind of like March Madness, to thriving in your ACfR preparation process. And so again, this can be whether you're doing it completely on your own. This can be even if you're not doing an ACfR, you're just doing a financial report. This can be if you're co-sourcing, outsourcing, any mix, you should be able to follow in general this 4-phase process. I know you all are probably wondering, where's my next poll question? These guys have been talking for a while. Here is poll question number 3. How long does it typically take you from start to finish to prepare your ACfR/financial statement? A couple options there: 0 to 4 weeks, 5 to 8 weeks, more than 8 weeks. I keep working on it until my auditor makes me stop, or I do not prepare an ACfR/financial statement.
I thought it was an all-year process.
Year-round ACfR prep process.
You start the day you issue, right? You start for the next one.
Iterative. There you go. Yeah, I mean, with these, the reason I put D is like, you know, at a certain point, these 300-page documents, you're going to find things. You're going to find an extra space. You're going to find an extra period. You're going to wish you would have page broke somewhere else. And so sometimes we do see that, and it looks like 9% of you agreed with that. So to give the results, the highest answer was 39% of you said more than 8 weeks. A quarter of you said 5 to 8 weeks. 6% of you are super quick, start to finish in less than a month. That is amazing. And they, like I said, about 9% keep working till the auditor makes them stop. All right. Let's get into this 4-phase preparation process. For a project such as this that is so time intensive, so labor intensive, it's easier to break it up into chunks. And so the 4 chunks that we break this into is building, roll forward, drafting, and quality control. And so as you're thinking about this process, sometimes it gets mushed together, especially if you're, you know, here September 1st and you need to be issued in 60 days and you haven't started, you know, it's going to kind of all blend together. But we're talking best practice here. You know, whether it be you still be able to do it for fiscal year 23, or if it's a goal for fiscal year 24 in terms of the process. So let's get into building. The first thing that you want to be thinking about is, okay, what do I have? What is my starting point before I get going with trying to import the trial balance and trying to put the notes together and all of those types of things? What am I starting with? So determine what financial statement writing tools or software you are going to utilize. I know there are some ERP systems that have an attached financial module. There's also some companies that will sell just financial reporting software. Truthfully, as I said today, from seeing those types of products, we still believe that our engagement management software with our Word and Excel seems to hold up really well. It's very hard with the amount of numbers and everything that's changing to have something that's going to be so streamlined with this process. If you're new to the organization or the project, right, you've been assigned or voluntold the ACfR, take time to see what has already been created. What do I have? What is my end goal? If the prior year ACfR was not already prepared, or you can't find that information, make sure you start with last year's issued ACfR and account mapping, and make sure that all of the balances agree. Are you starting with a linked prior year ACfR that ties to what you put out on your website and that was issued? What this will catch is those last minute edits. Say you were doing really good and you were linking things throughout the process, and then you get to October 28th and you're realizing, oh, this needs to move from here to here. You go into the Excel document, you do plus 100,000, and then you go to the other Excel document minus 100,000. Well, if you don't delete that in the next year, whenever you have this linked financial statement, you're going to still be off by that 100,000 both of those places. So any of those things that were topside or rushed, I just need to get it out, you want to check those as part of this building phase to make sure that you're starting off with something that works, starting off with something that ties to your prior year issued ACfR. Within this, you want to identify any grouping changes or any formatting that you wish you would have made. We talk about this idea of at some point it's pencils down, but if there were things that you wanted to move, maybe there was a small immaterial balance that really should have been charges for services and you had it in miscellaneous or something like that. Let's make those changes now before we get into the heat of the ACfR writing process. In addition, any formatting changes that you're building the shell. Next, let's go into rolling it forward. All right, so now what we're going to do is those formatting grouping issues, let's fix those right now. And now let's group the new accounts for the current year based on our preliminary trial balance, right? If you added any new accounts for fiscal year 23, let's make sure that we group and map those now. So for this year, a lot of you all had to add accounts for your subscription-based IT arrangements. And there are some governments that are saying, well, I didn't even create the accounts until now. And they're here 2 weeks before issuing a financial statement trying to add new accounts. And so what we want to try to do is try to do that earlier, identify the new accounts that you're going to need, if any new funds that were created, all those types of things, and get them set up here in this roll forward phase. You'll also want to check that fund balance rolls from the prior year. Hopefully you've done that before the ACfR writing process, but sometimes that pops out where you want to make sure that everything was close. So you're starting with the correct beginning net position and beginning fund balance. You'll want to review the ACfR preparation checklist or whatever you're using, look at the templates and assign a responsible party. One of my favorite things to say is that if everybody is responsible, no one is responsible. So identifying who that responsible party is, and then rolling forward those dates. So anything that is going from fiscal year for FY22 to FY23, let's change that now. If we have comparative schedules, let's take that 22 column, carry it over. Let's make that the new prior year column, and let's create a blank fiscal year 2023 column. Now we get into the thick of things. We're getting into the drafting. So we've built that shell, we've rolled it forward, we've grouped the accounts. Now you'll want to import that final trial balance to your ACfR tool or whatever software that is being utilized. At this point, you will also want to reevaluate, if you haven't yet, your major funds for the current year using our major fund determination worksheet or some other template. And then you'll want to add or remove funds that need to go from major to non-major or vice versa. The way that we typically think about preparing financial statements, and of course, every entity is different, but if you're new to this process, like thinking about going from the back to the front. So looking at those combining schedules, let's try to pull together some of that non-major information that then rolls up into the front of the financial statements. And it seems to be a nice way to flow from the back to the front with the government wides last. But sometimes with these things, the urgency and the need, you have different people assigned to different sections, and that's totally fine if you're doing them concurrently as well. At this point, and we're noting it here in drafting and not in the next final section, let's put together the MD&A based off of current year activity. Let's really make that effort this year to actually address things versus just going, oh, it went from, the balance went up this year versus going down last year. Let me just delete N and I and change it to D and E for increase versus decrease, right? We want to do a little bit more than that with our financial analysis and our MD&A. And lastly, the quality control. So we referenced that general purpose checklist for GFOA. Use that or any other financial statement review checklist to make sure that you've hit all of your marks. Hopefully within your document or your software, you've built in a lot of check figures, right? There's so many things that need to balance between the notes, the face of the financial statements, in the back. Hopefully you have a nice clean way of making sure that all of the check figures are zeroing out with each other. At that point that you have the issue document, you want to do a high-level analytical review. Pull up last year's document on one screen, pull up this year's ACfR on one screen, and just, does it feel right? Does it look right? Are my functional expense categories close to what they were in the prior year? In addition to that, you'll want to do a detailed review of the ACfR to the notes. So you're going to do comparative year to year. Then you're going to do the ACfR itself to the notes. You're also going to want to look at your mapping and making sure that everything is grouped and linked correctly. The last thing that I'll point out is, your auditor is also going to be involved in this process. Now, keep in mind, they are not part of your system of internal control, but you do in this quality control process do want to take into account their requested changes as part of the audit process and use these to get to that issued financial statement. If you want to hear more about that four level process, I try to keep this part of the presentation where we talk about how we think about how we do things brief, so we really leave enough time for the the material that Scott dug in. But if you want to hear more about how that would look for you, please let me know. Be happy to discuss how we're helping other governments through that 4-phase process. Last polling question. Polling question number 4. Did you know that your audit firm is allowed to prepare your ACfR/financial statement if appropriate safeguards are put into place? A, yes, and I'd like to learn more. B, no, I did not know that and would like to learn more. Yes, but we love drafting our ACfR financial statements. It wouldn't be a fiscal year without digging in and getting those done. Or D, did not know that, but we will continue to write it ourselves. So you can please provide notes for that polling question. I will say one of the presentations that I've been doing a lot, and do it again this week at a conference, is around the staffing environment and where we're at in terms of staffing shortage with people that can speak ACfR, that can do the government accounting and financial reporting. And one of the areas that we're seeing people start to carve away is this ACfR writing process. And this is one of the things that people are realizing. If I have to break something off, this is something that I can break off. That's a clean break where I can maybe co-source it and give a little bit more time back to my employees for these other tasks, especially as we're short-staffed. Thank you all for writing in. I appreciate that. It looks like about half of you were aware of this and half of you were not. So we're glad that we could at least share that information, whether Cherry Bekaert is your auditor or not. As we wrap up, we're coming to the top of the hour. So thankful that you all spent an hour, a week before many of your deadlines, for you June 30s. But we are here for you if you need help. And so on this screen, you will be able to see a QR code that takes you to our landing page for what we call our GASB as a service offering. And ACfR preparation, as I mentioned way at the beginning at the introduction, is one of our 4 core things that we do. In addition to Scott and myself, our team has decades of experience preparing these ACfRs and financial statements. And we are here to help you all be a resource and option as you're dealing with kind of our current environment of the staffing and financing challenges that you all are facing. And you've seen the report from Lightcast where other finance and accounting industries have kind of bounced back from their pre-COVID levels, but we're still at below COVID levels in terms of employment for government and accounting personnel. Greatly appreciate it. You have our email addresses here. You should receive a survey link. Please reply to that and let us know how we did. Also, let us know additional topics. We are beginning to map out our 2024 and what we're going to be presenting. So let us know what you want to hear from Scott and myself or the larger Cherry Bekaert team on in 2024. With that, I think, let me see if we have any additional questions. A lot of there is a few, but it looks like they're all kind of narrow scope. So we will reply to these questions directly to you after this webinar. Thank you so much again for attending, and wherever you're at, if you're 1 week away from issuance or you're just getting started as a 930, best of luck with your fiscal year 23 ACfR reporting process. See you, everyone.